Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the show today, Nigeria's Manufacturing Purchasing Managers Index a little weaker in September at 58.1 reading. Uganda's central bank lowers its key lending rate to 9.5%. Plus, rating agency Moody's places Kenya's B1 rating on review for downgrade. Let's get started now. We're beginning here in Nigeria, where the Manufacturing Purchasing Managers Index was a little weaker in September at 58.1 reading compared with 58.5 in August. The monthly PMI report released by FBN Quest today shows 3 of 5 sub-indices picked up in September and all were in positive territory. The headline reading has been above 50 since March 2017. Among the sub-indices, there was a small improvement in output and a particularly strong reading of 60 for new orders. FBN Quest says Nigeria has finally emerged from recession as both GDP and manufacturing expanded by 0.6% year-on-year in the second quarter. Despite the weaker PMI reading, Nigeria is higher than Brazil with 50.9 and 52.4 for China. Nigeria is in the same category with the Eurozone, which has a PMI reading of 58.1 in September. The only country with a higher reading above Nigeria is the United States at 60.7. Meanwhile, Egypt's non-oil private sector business activity shrank at its sharpest pace in 3 months in September amid contractions in new orders and outputs. But companies were optimistic that growth will pick up in the coming year. The Emirates NBD Egypt Purchasing Managers Index for the non-oil private sector slipped to 47.4 in September from 48.9 in August, remaining below the 50 mark that separates growth from contraction. The output sub-index declined to 46.5 in September from 48.8 a month earlier, while new orders declined to 48 from 49.5 in August. New exports declined for the first time since March, with the sub-index falling to 48.5 from 53.7 a month earlier, ending a 5-month trend of growth attributed to the floating of the Egyptian pound in November, which saw it lose half its value. And to markets now, the Nigerian Stock Exchange and the Egypt stock markets were trading low at intraday today. Now, the NSE index was down 0.04% as the market begins business in the new month. Egypt was down 0.75%, and Egypt plans to issue dollar-denominated Eurobonds between January and February next year, followed by a euro-denominated issue later. The dollar-denominated Eurobonds will be worth $3 billion to $5 billion, and the euro-denominated issue around 1 to 1.5 billion euros. Egypt has been negotiating billions of dollars in aid from multilateral lenders, including a 3-year, $12 billion loan program from the International Monetary Fund to help revive an economy hit by upheaval since the 2011 revolt. The market in South Africa was up 0.87%, and of course Kenya there closed down 0.64% on Monday. And in the Middle East, markets there were mostly steady, ignoring another drop in oil prices amid oversupply concerns. The Saudi stock index was almost flat after an hour, but traded up 0.25% at intraday. Sharia-compliant insurer Saab Takaful dropped 4.3%. That's after the financial regulator temporarily stopped the company from issuing or renewing insurance or savings products, citing unspecified weaknesses in its internal controls. Qatar's index fell 0.21%, dragged down by the banking sector. Qatar First Bank, Masraf Al Rayan, and Qatar Islamic Bank were all lower, with the latter down 1.7%. The Dubai index rebounded 0.25% as Emma Properties gained 0.6% after reports say its local real estate development business, which is preparing for an initial public offer of shares, was expected to be valued at 24 billion dirhams. And Abu Dhabi market there was up 0.31%. And in Europe, stocks there moved slightly higher in early trade as political concerns eased slightly and investors focused on data releases. Germany's stock exchanges are closed for a National Day holiday. In Spain, stocks edged slightly higher after falling sharply on Monday following a non-binding referendum vote in Catalonia. The government in Madrid has said that it wants to work with other parties to resolve the issue of Catalan independence. Looking across the European benchmark stock 600 index, the British firm Ferguson rose to the top, up by more than 3%. This is after it announced a 500 million share buyback due to higher profits. In the corporate world, Uber's new global chief is in London to meet with Transport for London after the regulator said the company couldn't operate in London. Syngenta received a BBB- classification from S&P, which says that the Chinese government may not support the company with litigation issues. On the data front, there will be construction PMIs in the UK, and the Bank of England will release minutes from its latest financial policy committee meeting. And in the U.S., the index futures pointed to a slightly higher open today with a positive trading streak for the fourth quarter set to continue after Wall Street finished on a strong note in the previous session. On the first trading day of 2017's fourth quarter, U.S. equities finished Monday's session on a strong note, not only closing at record highs, but with the Dow Jones Industrial Average rising 152.51 points by the close. While this positive trading sentiment is set to continue, domestic and political news, however, are set to keep investors on the edge. One of the key stories set to dominate talk today is that of Sunday's deadly shooting in Las Vegas. At least 59 people were killed and more than 500 were injured after a gunman opened fire on thousands of concert goers at a country music festival. The incident has been categorized as the deadliest mass shooting in modern U.S. history.